Welcome to the December 31st edition of the Milk Market Update, which will be the last podcast covering prices in 2021. I did skip last week's podcast, which I apologize for, but we did have some family home. And I will tell you about my two girls because it's somewhat significant. So the one on the left is Annabelle. She is a general surgeon in the Harvard program up in Boston. And because she was in the program last week and swimming in a sea of COVID from unvaccinated patients, she did bring Omicron home to the house, and we all did have a significant COVID experience this last week, but we're all recovering now. Elena is just joined a group called McKinsey Consulting, which is the nation's largest consulting group. She's in the FARME group, and as a side note, it was the group that she's in that actually helped Moderna develop the COVID vaccine. So if we look back on 2021, I plotted out here the statistical uniform prices for order one. Now, they're going to be a different value for each order, but they're going to follow the same overall trend. And if we break 2021 here, we can see that we've had generally a pretty nice run up in milk prices. Again, we had the pandemic, which created all sorts of chaos. And then prior to that, on 2019, we had a very nice run up in milk prices. So really, 2021 is very reminiscent of 2019. Now, right before Christmas, we had just a large group of data being dumped on us for milk production report and cold storage report. So I'll need to review these real quick. So what I presented to you was the trend that I had calculated from the data, and then I was able to get the StoneX values, and then we have the actual values. So we look at production first. To me, it is really, these are all exactly the same number, whether it's 18.1 or 18.0, production is basically not changed. Now, if we look at the cold storage, I had cheese at 1.4 billion. StoneX had it at 1.429. It came in at 1.421. So again, everybody was pretty well the same. So I would call these trend line kind of estimates. Now the problem with all of these estimates is we've yet to get this report down here, which is the cheese production, which gives us the total disappearance. And so what's going on in the industry is we spend a lot of time on supply. And then eventually demand comes in and is balancing the whole thing. And so what we do is the industry just absolutely loves talking about supply numbers, but not so much so on demand. And I actually think it is this last report that actually puts everything into context for us. If we look at cows, there's no doubt we are in a 6-month contraction. So we've lost 122,000 cows. Again, to me, that's not impressive because we never, ever should have got above this level right here. The industry should have known better. We should have had some mechanism to sound an alarm. And I've got some ideas of what that might be, but we're a little ways from that yet. So again, the numbers that we're at right now, they're quite a bit higher than 2019. They're a little bit lower than 2018, and they're quite a bit higher, in this time period back here. So again, I don't think this is quite as bullish as everybody's reading it, because if you simply say, we've lost 122,000 cows, the industry is in contraction, that sounds really, really impressive and should be very bullish. But where we started from, I don't think it is so much so. Look at these milk production numbers. This is what's got me kind of worried in the industry. So this is where we gained milk. Minnesota, Wisconsin, Iowa, South Dakota. Those are all cheese producing states. Where did we lose milk? Arizona, New Mexico. And again, these cows largely went to Texas. So that's what happened there. But what we're seeing is a tremendous amount of loss in areas that are not necessarily high class 3 or cheese producing. And so to me, this is still bullish on class 4, bearish on class 3. So let's look at how the production across the nation came in. And so here is our last number, and that's just a little bit below the trend line, but again, not statistically so, because we've had ones before. And when we look at production, it's going to say that it was down from November 2020, but we were way above trend line. So to me, that doesn't make any sense. When we say we're down 0.4% from November 2020, again, who cares? Because that November 2020 number was way off of trend line. Now, to me, the issue is the cold storage report. This is the American cheese stocks. Look, these are just out of control. We had a little bit of a pull down in stocks this last month, but those were the Italian cheeses. And so the American cheese stocks is just really out of control. This is the highest that we've been in a long time. And if we look at the cheese stocks total on trend line, we're right on trend line. Couldn't be off. And again, this is assuming a 3.3% annual growth. That's what that trend line is. So again, to me, this isn't overly bullish. This is just kind of sustainable in the market. We did have a global dairy trade auction. This has been very much trending down. This one was down 1.5%. And if we look at what happened is it was the whole milk powder that just really drove that index down. So butter was up, cheddar was up a little, skim milk powder, which is a proxy for non-fat dry milk, were up a little bit. But it's that whole milk powder that just really pulled that all down. So if we look at the cheese highlights from USDA, there's a couple of things that grab my attention. First off, milk availability has grown a little bit. Yes, we're between $2 and $4 under class, and again, last year we were $10. Omicron is something that I think is still going to impact demand, and then the cheese tones, are uncertain because again we have got that large barrel to block, but overall people are bullish on the undercurrent because they're expecting a demand rebound in 2022, but we actually haven't seen it yet, I don't think. So the week was actually a pretty good week. We came up 28 cents across the next 12 months, and so that was a fairly significant. And again, the theme throughout this entire thing is butter is driving the bus right now. Butter was up 10 cents, cheese was up 2.3, whey was basically unchanged, and non-fat dry milk was down just a little bit. But the overall theme is going to be butter is driving the bus in this increased milk prices. So let's start looking at some of the data and see if we can make sense out of it. So we've had 4 of the 5 national dairy sales reports so far, and in this last week, I didn't show you my estimates because I didn't do it last week, but blocks came in just a little bit stronger than I thought they would, but then going back and look at the data, I actually pretty much agreed with that. So right now we're really focused on about an 1833 class 3, and you got to remember that 2 weeks ago I had that 1836 and the trade was much, much higher. Well, now the trade has kind of come down to the 1842, so I think I can say that December is going to close somewhere between 18 and 1850. I can't tell you exactly the number, but we should have about 2.28 butter fat, $2.60 on protein, and about 46 cents on other solids. Now, right now I've got class 4 at 1977 and the trays at 1987. So again, those aren't far off. So we look at how the National Dairy Sales Report has been compared to the spot market. So we have 4 underway right now, and we've got this 5th one, and you see that they're basically on top of each other, and I'm expecting this 5th one to cut underneath the spot market because again, the following week is down quite a bit. And so the table that I think is the most valuable of all of this is what kind of premium have we been having. So we know that the spot market is 1844, and if we bring class 3 in at 1840, that's about a 4 cent negative premium. And again, I've showing this about a 41-cent negative. And what's really driving this down is these whey premiums. So whey is not following the spot market. And so we're showing usually about a 35-cent negative premium off of whey. So this next National Dairy Sales Report will be the final one. So again, you can see how those numbers come in, and again, we're about 1833. So I keep getting asked, what is January going to look like? Are we going to see $20 Class 3? And so we'll go over that a little bit when we look at the futures. So I put together this scenario which says to get to $20 Class 3, we need $1.82 spot cheese as an average. So for the week, we have $1.79. The trade is currently at $20.07. And so the question is, can we get up and sustain that average of $1.82? And so the question really becomes, what's going to happen to blocks? Because I've said barrels should be $1.65, $1.75, and so these are in that range. I suspect these are going to drop down here this next week, and I'll give you lots of reasons for that here in a few minutes, but I don't expect blocks to go into that 205, 210 kind of number on the spot market. Again, I could definitely be wrong, but that's my best guess at this point. So again, this is the spot market, and I have that $1.75, $1.90 blocks and barrels. So we're under it for barrels. Again, will this continue up, or will this kind of come back down into here? We'll see this next week, but I really suspect it's going to come down. So here are some new graphs, and one of the reasons I wanted to show the pictures of my girls is Elena, when she went to work with McKenzie's, went through a significant training on how to build PowerPoints and how to communicate message to clients. And so I asked her to help me with these graphs. So these are my new spot market graphs, and I'll try to explain these for you, because this one is specifically due to cheese. So the top number is what the global dairy trade is currently at. So again, we are $2.38. This first block of gray is the blocks with the high and the low as the range of that. And so we can kind of see that in the last week that they've been coming up. And then in the black strip is the number of trades. So again, we have 2, 2, 1, 2, 0. So not a huge number of trades. And so the first thing I conclude on this block spot market, it's pretty thin. So the bottom is the barrels. Again, we've had 10 trades here and 11 trades here. So it's a little bit got stronger foundation. And again, you can see that it has gone from $1.62 to $1.71 as a high to a low in that range. So barrels are acting about where I would expect them to be. This $1.86 to $1.98 is probably a little strong on blocks. Kind of the same format for whey, except we don't have two graphs on there, so I didn't put in any gray. So whey has just been kind of coming up. It was flat all week, but look at this, 0, 0, 0, 0, 0. And even the week before, 0, 0, 1, 0. So the question is, why is the National Dairy Sales Report not following the spot market? Well, that's the reason. There are just basically no trades. There's no price discovery in whey at all. Butter has been coming up. The global dairy trade is 266, and the fact that that line is green tells you that actually was on an upward trend, a nice uptrend on the spot market for butter. And so how much more up does this have? We're at 245. Probably has, a little, or at least has foundation here. And again, there were 16 trades back here, 10, 12. So butter has been traded fairly heavily. So I think it's also got a good foundation. Non-fat dry milk has been struggling a little bit. It's $1.64 to $1.68. The global dairy trade is $1.81. So that would suggest there is a bunch of upward movement. But again, normally if you take 10 cents off of this for kind of a basis, you're $1.71. You take another 10 cents off, for kind of being in the global market, you're $1.61. So maybe we are right where we need to be on that non-fat dry milk spot market. So if we look at class 3, it came up 29 cents. Again, quite a bit here, all new contract highs. And what drove that was this cheese. Cheese came up, whey was basically not changed significant, and butter hit all new contract highs down here. So there are two things that come to my mind, and you've heard me say this numerous times. I don't like to see these kind of structures in this graph. Whenever I see 1 or 2 months that are out of line with everything else, I really ask the question if that's going to hold. So will that February and March contract hold? We'll know soon. But basically, Class 3 is hovering right around this $20 mark for the tail end of 2022, and that's what most people are believing right now, is that it's kind of got a ceiling at $20. Now some people are talking $22, $23, $24, late summer. As I've said, I've sold this contract short. I'm expecting it to be more like 19. So I'm not betting on that 2022 like everybody else is. If we look at class 4, it came up 28 cents. And again, all new contract highs. That's driven, again, by butter. Look at this butter contract. It just is very, very strong. Non-fat dry milk actually lost about 2 cents, so it was more of an anchor on it than butter was. So if we look at this class 3 and class 4 now together, class 4 is just dominating class 3. So during the pandemic, the food box program, class 3 got very strong, and now it's just the reverse. That class 4 is very strong due to the exports of butter and non-fat dry milk, where cheese is somewhat abundant and more domestic. So I was asked about the value of palm fat, as on-farm fat prices are coming up. And so again, palm fat is very good at increasing butter fat. And right now, the numbers would suggest that if you can get palm fat in your diet, somewhere around $1,025, it's probably worth it. If you're in that $1,800, $1,900 for palm fat, you're probably better off having lower fat than paying to get it through that. And so an 80% palm fat, is going to be that $825 also. So again, how did all this come together with a 28 cent overall increase? Again, there was very little difference between class 3 and class 4. And so it turns out that butter raised at almost 20 cents. So that was almost 3/4 of that actual increase. Cheese came up another 13, and non-fat dry milk came down 6 cents. So again, butter is driving this ship right now. So I've got a new calendar. Tried to pull this together a little bit different so it was a little bit faster. So this next week, we're going to have a global dairy trade on Tuesday. We'll have the final December numbers on Wednesday. And then to me, the big report is the dairy products report on Thursday. Next week, we're going to have the statistical uniform prices, and that's a big week for grains with the WASDE report. So we move into grains for just a minute. This is a graph from 2 weeks ago that I had in the program, just talking about that this whole cold air mass in Canada has the potential to come down into the U.S. So here's where we are today. This was on January 1st. You can see this cold air, starting to invade here a little bit. And as this comes down and comes a little bit east, that's going to be some significant cold values here for this next week or two. And this is the really the big story here. This is the polar vortex. So try to orient you a little bit. Down here is Florida. Here are the Great Lakes. Here's the border of the U.S. And this thing is supposed to be circular. Nice, tight, and circular. Look at this elongation. This is driving this cold air into the U.S., something amazing. So again, we're setting up for a significant cold event, probably something like we had last February in Texas, maybe a bit more to the east and a little bit more prolonged. If we look at this corn contract, we actually broke $6 on that March contract that came back this last week to $5.93. Lots of discussion about what's going on with South America at this point, and we're getting into these acreage battles. But it has been, generally up, and if we can break through the $6 number, for very long, people are really starting to flirt with $6.40, $6.50 again. Bean meal was the big story. Again, we were down to $3.25 here for a while, and that was a great place to lock in bean meal. But look at what's happened. We broke $4.05 one day, and we're down to $3.97. But this probably has more upward to it yet, as Argentina, Paraguay, and southern Brazil are really dry. So it's going to be interesting as to how this bean meal kind of comes together, but there was a great opportunity to lock in all of your protein needs down here in that 320 per ton number. May heating oil, this is a proxy for on-farm fuel. I think I commented when we were down here at $2 that, again, that's probably going to be the low, especially given the forecast that we've got for cold weather coming, and so this has come up, over 10% since then. We're pulled back a little bit, but expect this to, pop back up to this 250 number here, probably pretty soon. So as I sit here and look at this next week, there's several things I want to keep my eye on. Number one, there's tremendous rumors that there's going to be a large amount of dollars coming into the commodity markets for hedge kind of funds, right after the new year. So expect corn, beans, wheat, all of these to make a bit of a run here this next week. Milk is going to have to reconcile where it's at. I've got the January number. My best guess, the highest I can see it is around 1970, but more like 1950. So we'll sort that out and see how this dairy products report comes out relative to disappearance. So I want to thank everybody for listening to this podcast, and I hope you have a great week.